these long and slow summer days, it's really easy to get drawn into the less than ideal trading solutions or conditions or whatever you're looking for to give you your conviction behind the trade, and then you try to force a trade. This is obviously never a fantastic idea, as firstly, the markets aren't moving that much, relatively speaking, and secondly, if you make one false move, you could, well, get locked into trading the market for the rest of this session. And you know what happens? A lot of people, they'll take the little $300, $400, $500 loss in the morning, and they have to make it back during the afternoon, and they have to try to make it back, and then they start doing things that break their own risk reward parameters. So that's something that I've noticed some traders doing, especially over here in this summer, and it's definitely something that you should be watching. You know, as a trader who is, focused in the markets, this is the prime time for what I like to refer to as that other work. And that other work is, for example, getting your books in order, or doing a performance review, or looking back, seeing what you're doing well, and seeing what you're trading well, seeing what you're not trading well, and then focusing on your strengths while trying to eliminate your weaknesses. But what really can help drive a trader onwards and upwards is researching ideas. A common theme for how successful traders work is that they spend quality time researching and testing their ideas. Then, only then, does a trader formulate plans to potentially capitalize on those ideas. This is part of the trader's edge, and this is really part of the trader's edge, and it's just really what I've seen the successful summer traders do to make money in this market. So, with this researching, with this researching and whatnot, you always should have a stack of ideas. That's what I'm looking for. A stack of ideas, that you have to study and work out and then determine if they are worth pursuing. I guess ultimately the question is how to come up with the ideas to begin with. Well, I think this partly comes down to experience, and I think it comes down to having a structure for the market to relate observed behavior to, whether that is in terms of balance and imbalance, or time periods, or volume, or charts, or technicals, whatever else, it's up to you. But once you have the structure, you can get the better feel for when an observation is most likely to occur. A very simple example of this is what we do really here in Shine's Room. We're bringing new things here to the table, from even just a little VWAP seminar here, and we have, hopefully a lot more of that, and you're trying to learn ideas. The way you apply these ideas has to be something that is completely structured. Clearly, though, an idea isn't enough to just go out and make us money. I'm like, I like the way bull flags trade. Bull flags are just going to throw out there, just make me money. Obviously, an idea isn't enough to make the money. So how frequently this idea happens is important. How much did the market extend on those days when an extreme is made in the last hour of trading? This is important too. The question of how swift a move away from an extreme is when it is made in the first hour of trading is potentially useful for an answer. All this information from the questions you ask can come together in a way which helps you to master the entire situation when it recurs in the future, and then trade that pattern, that setup, whatever you were looking at, with confidence. Once you've thought of the idea and tested it for validity, you must come up with a coherent trading plan to take advantage of that particular behavior. This includes how and where you will enter, what your maximum risk will be, how you manage risk throughout the duration of the trade, and where you intend to take profits, and what would cause you to exit a profitable trade early. If these questions aren't adequately answered, you're leaving yourself open to the possibility of things going wrong during the trade. And of course, last but not least, when you have the confidence that you've created this solid plan based on this great idea of repetitive market behavior, you must test that plan out. You must note down the P&L for each trade and the various different trade statistics for the strategy you are implementing. You must also note down your thoughts at the time and how the market actually feels exactly when you are taking that trade. Often you could come up with a great idea on paper, but when you try it out in person, it sometimes falls short. Without diligently journaling what happens when you take the trades, well, guess what? If you don't do that, it could well take you a lot longer to understand what's going wrong and cost you a great deal more money. So when it's dull like this, do yourself a favor and do a little research and development on yourself for your trading ideas. Happy trading, make money. I hope you guys enjoyed this quick webcast presentation. And I do have a quote here from Lord Chesterfield. Here's an interesting quote here from Lord Chesterfield. A fair reputation is a plant, delicate in its nature, and by no means rapid in its growth. It will not shoot up in a night like the gourd of the prophet, but like the gourd, it may perish in a night. So that's just an interesting little quote there. Again, remember to analyze and look over any new market things that you are doing, any things that you are currently doing. These are things that you should be aware of before you try to apply any new strategy towards your trading. So I hope you guys enjoyed this webcast presentation, and if you guys have any questions,